Report for December 20th, 2024. Good Lord, Christmas is really, really close, and not going to lie, I've got nothing done. I'm so far behind the ball this year. This is really unlike me, too. So I don't know what's going on there, but guess it's going to be a busy weekend taking care of Christmas. So let's get into what happened this week. Mortgage applications purchases were up 1% in terms of activity. Refinances down 3%. Not surprising. It's been kind of a harsh week the last couple of weeks. Losing some ground. Initial jobless claims, those filing for the first time, down 22,000 and continuing down 5,000. So we again continue to see this seesaw in activity as it relates to unemployment. Retail sales for the month of October came out hot at 0.7%, and the estimate was 0.5%. Now, within that report, though, a lot of it was auto sales. In fact, if you take out auto sales, then retail sales would have only been up 0.2%. So very interesting. A lot of people buying cars right now. The core number at the expectation of 0.4%. My thoughts maybe possibly on the auto sales is that people concerned about the tariffs that might be put in place with Trump coming into office, and that will be detrimental to auto sales. That's especially for luxury cars when we're talking a lot of foreign-made cars that make up that luxury market that a lot of people seem to like. Now, also, we did receive a third quarter GDP, came in very hot as well at 3.1% versus the expectation of 2.8%. So again, this week, not good for the MBS market. A lot of news coming out there, not favorable to us. And then the Fed's favorite measure of inflation came in, personal consumption expenditures. Headline number at 0.1%. This is actually a pretty modest report and came in kind of where expectations were anticipated. So the core number at 0.1%, and the estimate was 0.2%. So fortunately for us, the PCE helped us this week, but a lot of other things were detrimental to us. This week, the Feds did announce that they were going to do one more rate cut of 25 basis points. A little surprised by that just because retail sales have been so strong. But they were very hawkish in their comments, indicating that don't anticipate a lot of changes in Fed cuts for next year. Now, whether they stick to that, we'll see, just because things can change pretty quickly in our numbers. So if unemployment were to go up quite a bit, that could, they might, walk back that statement and give us some more Fed cuts more aggressively. We'll see. But right now, being pretty hawkish, and the market didn't respond very favorably to that. We also did get existing home sales for the month of November. Some of the things that we look at within here showing that annualized we're at 4.8% month over month. The median home price at $406,100. That is down, but that is the national number. Do bear in mind, Colorado is much more expensive. We're up at $600,000 for that median home price. And remember, median home price represents that number where 50% of the homes sold less than that price point and 50% sold more than that. So it is heavily weighted by the price point. Abundance of price points in particular areas. So if more homes are sold below 400,000, that's why that number comes down. Inventory at 1.33 million units, down month over month, but year over year we're up 17%, so that's positive. The current supply is 3.8%, so again, continuing to see inventory tick up, but we're still not at that normal market level of 4.6 months. So again, that is in line with the fact that home values will continue to be strong because the inventory is low and the demand exceeds that inventory level need. So that does support home values. We're not going to see home values coming down. Days on market at 32 days, so up just a little bit slower right now, but that's good for buyers. Gives them a little more time to think about what they want to make in terms of their offer. So don't think that is a negative. And then you can see the composition of buyers. First-time home buyers making up 30%, cash buyers at 25%, and investors at 13%, down quite a bit. So let's take a look at the charts. This is your 10-year treasury. The long-term mortgage rates tend to follow this a little bit. Today has been a good day, but if you go back to Wednesday, you can see not where we wanted to be. Bad day. We've lost a lot of ground. We're below where we were 2 months ago. We're above in this chart, but we want to be in the green, going up. Not this just isn't where we want to be at this point. We did see an increase in mortgage rates this week, trying to make that ground back up. So next week, Christmas, it's going to be a short week. Not a lot of activity. A lot of places closed. Monday or Tuesday and Thursday, or Tuesday and Wednesday, with Christmas being on a Wednesday. And possible people taking off a lot more time just because it falls in the middle of the week. So taking some vacation time to make it a very long weekend. If that's you, I hope you have a great weekend. Great long week. I hope you have a great Christmas. Maybe if we're lucky, we'll get some snow. I'm wearing my little snowman today because I don't like Christmas without snow. Let us be forced to stay with the people we love for a full day and keep us snowed in. It's good for family relations. And football, got a lot of football to talk about. I'm a Rams fan, so headed out to see them play Arizona in 2 weeks, and then Seattle the following weekend. So hoping my team takes the division. We'll see. For you Broncos fan, good luck to you. Last night didn't help you out. Sorry. But otherwise, have a great weekend. Get your Christmas shopping done. I'll see you next week.